Like there's a lot of dollar-denominated debt out. So the mother of all safe haven trades, like it or not, U.S. Treasuries are still a safe haven trade because people need collateral. There's a lot of bond traders out there. There's a lot of pension funds and a lot of insurance companies and everything else that need the collateral. A lot of banks need the collateral to offset reserves. Blah, 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 blah. We're moving into a currency crisis. Central banks need gold. The United States wants to create a Bitcoin reserve. U.S. stocks, biggest, deepest, most liquid equity markets in the world. You're a billion-dollar hedge fund manager and your family office with $2 billion worth of assets, and you want to just like move your money to the ground without moving price, where do you move it? The Dow. Shall I go on? Fuck all of you. Not you two, but everybody else, you have no fucking idea what's coming.
Take the first step towards online privacy. Get NordVPN.
When tyranny becomes law, rebellion becomes a duty. So said Thomas Jefferson. Go to bit.ly/lawful tax protest or bit.ly/make war history and find out why it is a criminal offence to pay central government or local government taxes in the UK.
And this is one of the things that I identified about this election that I found really, really interesting in the US. There's one thing, everybody after the election, everybody was like, look, Gen X just finally delivered the result that everybody's been waiting for them to deliver for quite a long time, because we broke very hard for Donald Trump, right? But we're also a very small segment of the demographic bulge of the United States as well. But we couldn't have done it without the children. Did anybody notice the 18 to 29 vote in the US? Trump nearly carried the 18 to 29 vote in the United States, okay? And that was a very clear signal that it's incumbent upon these people that Trump is now empowering. Look at this cabinet. It's a generational shift. Like, look at everything that he's like putting in place here. And that they're going to fight tooth and claw. Of course they are. Doesn't matter. You got to fight harder. You got to fight meaner. And maybe, just maybe, you have to fight dirtier. Because this is for your children. This is not, there's ugly shit that happens in war. This is political war. This is financial war. Guess what, folks? That's between you and your therapist and between you and your priest when this thing is fucking over. And that's what they're scared of. That's what they know in their heart of hearts that we're going to fight for. And we're going to do it here in the United States. And those who aren't prepared to go the full distance, those who don't have the stomach for it, those who would rather love their misery because it makes them feel powerful, or doesn't have the stones to stand up and declare themselves helpless and ask for help, well, that's fine. You don't need to participate. You stay where you are, and we'll take care of it. And you shut the fuck up, and we'll get this done, because we're not going to let them take our fucking kids. That's it. It's that simple. We're not going to get angry. We're not going to even raise our voices about it. I'm not going to go on some fucking rant. I'm not going to swear like a sailor, but you know what I mean. This is not going to happen. And you can see it in the people that Trump has around him. And you can see, and to everybody who thinks that it's just going to be the same as season 1 of the Trump show, go look at who's not around. Go look at who's there and then who's not there. The absence of the shitbags is deafening. And that's what you need to really focus on. I'm seeing it. And so that was a very big statement. They've got a very large mandate. And it's going to be hilarious. Like, I'm literally, as you guys were talking, I'm like, let me check and see what's going on. Maybe we missed something that's happened because news is happening so quickly. I'm scrolling through my Twitter feed, and what do I see? Donald Trump Jr. saying, hey, Elon Musk, wouldn't this be hilarious? MSNBC is for sale. And Elon Musk, echoing what he said 2 years ago about Twitter. How much does it cost? Okay. FYI, I was chatting with Joe Mazzoli, who's the showrunner for like Stargate SG1. He and I are Twitter mates and a couple other shows. And he said something similar a couple of weeks ago, about a week and a half ago when the news first broke. And he's like, Tom, you want to go splitsies on this? And I'm like, tweeted back, I'm like, searches under couch, finds a tenor. Sure, let's go for it. Like, you know what I mean? Like, I'd love to own MSNBC. I want to be Rachel Maddow's boss. Like, it would be hilarious, right? Take a $5 million pay cut on a $30 million salary for working one day a freaking week. I got news for you, honey. You're worth $24.99999 million less than what you're currently being paid.
Well, minimum wage.
If you don't take a job with MSNBC, the new MSNBC, for $1, and a cut of the advertising revenue, you're overpaid in this new media landscape. You don't exist anymore. You're done. Take your Adam's apple and have it go all a Twitter, a quiver, and leave. You're done. Joanne Reed, you're done. Everything. We haven't even gotten to the capital markets yet. Like, is anybody watching the euro? I just
Okay.
Oh man.
Take
And
us.
the pound. And
the pound.
Okay, Tom.
And-
Before you go, Alex, you take us there, right? Because I'm interested in your input. And then-
Yeah. No, I just wanted to lay that out there. By the way, we could probably all pull our assets and put in a bid for MSNBC. And if we all pulled up our couch money, wouldn't that be great? We should start a Kickstarter right now to buy MSNBC.
Send us your Bitcoin.
You know how much money we could probably raise on Kickstarter? A hell of a lot more than the latest board game phenomenon that's going out there. I got news for you. Like, we could do this, and we probably could put together a better bid. I mean, Musk can outbid us, but wouldn't it be better if we did it and not Musk? He'd probably like, you know what? I think I'll donate to that. Let's do this.
I'm in.
All right, that's it. I'm making a Kickstarter. I'll start the process. We'll go get a Kickstarter campaign for buying MSNBC to become Rachel Maddow's boss. Like, how fucking hilarious would this be? That, by the way, is your clip to advertise this friggin' video. Let's get that one viral. Let's go for it.
Yeah. All right. I'm in. Good plan. Good plan.
I got 50. Dude, I got $50 for this. Like, I'm gonna.
I got $500
like,
for that. I'm down for 500.
All right.
Oh my God.
Cool. No, let's do it.
Bring you both in, Alex. The currency markets: the euro, the pound, the dollar.
Hey, Rich, you're a big Bitcoin investor. You better be in for at least $5,000 with this.
I love this. Like, the Americans, like, I'm in for 50. Alex, the Europeans, like, I'm in for 500. Oh, but you Brit, like, you Bitcoiner, you're in for $5,000, dude. Like, we're just gonna, like, by the time we're done, you know.
It's not because he's a Brit. It's because he's like
crypto rich. Well, I'm actually crypto.
He's been pushing hard for me to get in on Bitcoin, and now, you know, like, I'm going to embarrass myself here voluntarily. And we talked about this. What, 2 weeks ago, Rich?
A couple of months ago.
No, because I remember.
Oh, we spoke.
Yeah. You know, like, Bitcoin is great. I like Bitcoin and all this, but you know, I was going to get in on Bitcoin when it was like $500. I'm not getting in at $50,000.
No, it's too expensive.
And he's still trying to convince me, and I'm like, come on, dude. No, there's gold, there's silver, there's other things. It doesn't have to be Bitcoin. And look at this now. From that conversation until now, Bitcoin's practically doubled.
Yep.
Right? And so, you know, like, the resentment is he didn't push me hard enough.
Yeah.
And so now
it's my fault. How many Bitcoin?
Exactly.
Actually, Alex, you're such a classy guy, right? You live in Monaco and everything. I think in that fine jumper, I think you should wait till it's more expensive. Give it another 9-10 months.
I want to wait for the top. I want to pull it.
Absolutely, Alex. You need to buy
I
the
want to
top.
pull a Druckenmiller. I want it an hour before it hits the top, and then I'll go all in.
All in.
That's the way to do it. That's the way to do it. So
no, but you know, speaking of,
I'll be honest with you, Alex. There will be somebody there to sell it to you because, you know, you're fleecing the retail
Alex,
markets.
I'll sell you mine.
It'll be rich. It'll be rich,
Yeah.
of course.
It'll be rich.
Okay, good. That's a deal. We've got that sorted. I'm glad. Now, what about the currency markets?
So the currency markets, I have to say, it gives me a little bit of satisfaction that this is you know, the scenario that we've been talking about for so long, I think is actually now happening. You know, British pound. Okay, so it was in 11 October 2021, I think.
Mm-hmm.
That I published my first article, The Collapse of Global Britain, an Investment Hypothesis. And I kind of predicted, my specific prediction was that Great Britain, as all declining powers through history, is going to repeat all the same mistake that all these declining empires through history have done. And that is that they're going to be increasingly involved in military misadventures around the world, that they're going to be imposing savage austerity at home against their own population and their own economy. The Bank of England is going to be backstopping all the losses on the books of their banking establishment. And the concrete predictions were that the gilt's going to go down, the FTSE is going to go up, and that the pound is also going to go down.
Mm-hmm.
And so far, all three have come to pass, except that the pound has fallen sharply at some point in 2000, I think 21 or 22, but then it has largely recovered against the dollar. Not fully since then, but it really hasn't been a collapse so far. And then over the summer, the pound and the gilt actually rallied, right? So the interest rates went down, the pound went up, and I was starting to look like I was wrong at that point. And the pound went to about $1.32 per British pound.
Mm-hmm.
And the gilt went, gosh, do I remember correctly now, to 90, 98, 99, something like this. Okay. And then happens Donald Trump's election, right? And it all goes kaboom. You know, that was the catalyzing event that tipped the whole complex back into the trend that started before, right? So the downward spiral, and the reason why I even made that prediction was when the United States pulled out of Afghanistan, which was 15 August 2021, and you saw the reactions in Britain. They were hysterical about it, and they were piling in on the United States, saying that, oh, you know, this is a new age of isolationism, and the United States is not a reliable partner that we thought we had, and blah blah blah. All of these, speeches of these MPs, Elijah Elwood. Do I remember the names correct?
Mm.
Anyway, I saw that they were extremely vexed by the U.S. pull out of Afghanistan, and I think that practically from the day when the pullout was announced, because the pullout was announced some days before it actually happened. The 15th August was the day when the Taliban walks into Kabul unopposed, right? And from that point on, all of the Western bond markets start to go into this bonds Armageddon, because it turned out to be the largest crash in bond prices on record, not just for Britain, also for the United States. And, the data goes back something like 260 years.
Wow. So
this is, over the next 2 years, starts the biggest crash in bond prices on record. But fast forward 3 years, the American markets are down something like 18-20%, if I'm not mistaken. The British are down, I think, more than 30, and the Europeans are just slightly better than the British. I'm due to publish an article with all this laid out in detail, but basically, to continue the prediction from this point forward, I think that Britain and Europe, and at this point, I'm not even sure who's in the worst shape. Britain and Europe are going down the toilet. I think that the gilts are going to continue deteriorating, that the pound is going to continue falling, and the same is going to happen to European bonds and to European currency. And then usually what you have throughout history in these circumstances is that the stock markets actually start going vertical. They start to accelerate towards vertical climb. Why? Because everything's going tits up, right? And the central bank is obliged to start pumping liquidity into the system. And that causes the markets and the people to lose confidence in the currency. So they want to get rid of it almost as fast as they have it. And how do you get rid of it? The bulk of it ends up in the stock market, right? They go and they buy shares in real companies so that they have something real rather than these paper scripts, right? And so that's why the stock markets tend to accelerate to the practically vertical climb. And so I think that what we are on a precipice of is going to be for history books. It's going to be at the level of Weimar Republic and the collapse of the Soviet Union. And it's going to be recorded in the history books. But if you play it right, you can come out the other way intact. Or you might even be able to come out the other way a bit wealthier than you started. And so the thing to do is sell short the gilts, sell short the British pound, buy FTSE. And then, again, these things don't happen on a straight line. It's not something that you can just get in over your head and close your eyes, and then 10 years later, you collect your windfalls. It's maybe it takes a little bit of skill to navigate all this, and you definitely don't want to get in over your head. You don't want to you don't want to try to strike it rich if you aren't already, right? But definitely you can at least partially offset the loss of your purchasing power that's going to occur due to inflation, and let's say avoid being in the basket of those who own nothing and now have to be happy with that.
Wow.
Yeah, no, just to put some further color on what Alex is talking about, he's correct. There's going to be an epic move into tangible assets in a broad sense, and I was laying it out on a podcast I did with Marty Bent the other day, and it's very similar. I mean, Mark Armstrong's been banging this drum for a very long time. He taught it to me, and I'm gonna pay that forward, which is the following: the 5 asset classes that are going to do very well in this environment all are effectively bearer assets of some form or another, and they're the most safe haven. They're safe haven assets. Let's start with gold, and then let's move to Bitcoin. Those are both bearer assets. And then, as Alex said, stocks, the dollar, and U.S. Treasuries. Now, U.S. Treasuries may fall in price and rise in yield, but they will do so slower than everybody else. So you could even play a spread trade against U.S. debt versus UK debt or German debt or whatever. This is something I've been talking about for a long, long time. And the only thing that's made that's made that trade, not work at this point is because that the ECB has been working overtime, along with hand in glove with the Treasury Department in the U.S. under Janet Yellen, to manipulate bond prices in order to hold that at bay. And they're continuing to do so. The German-U.S. 10-year spread right now is at a level that we haven't seen in years. And the reason for this is that Lagarde is holding the bond prices up as much as possible, and she's sacrificing the euro in the process. Same thing, the Bank of England is doing the same thing, sacrificing the pound in order to hold German UK gilts from busting out to the upside, because there are trillions of dollars of interest rate swaps, currency swaps, and everything else, carry trades that will explode and cause cascading margin calls and cash calls all across the world if this falls down. The other thing to watch is, and so that also says to me, hey, why don't you watch the euro pound cross, which is being furiously defended that it doesn't drop below 83 cents, meaning 0.83 euros to the British pound. This is a level that has been fought to the downside since Brexit in 2016. I made the point previously that part of the reason why that the promise of Brexit never occurred was because there was a massive 25% depreciation of the pound versus the euro, to punish Britons for even thinking about voting against Brexit, and then that currency regime has been held in place so that Britons could not get the benefit of the weaker pound to encourage foreign investment, because the EU has put controls up, and the British government has put controls up to not allow investment into Britain. They've been continuing to hollow out, and everything we talked about earlier, taking away the farmers' land, and raising taxes, and all these things that have happened, and the 3 years with the Brexit negotiations and all the other stuff. It's all reflected in the pound euro cross, which is why, for example, why posh, upper class Britons like Clarkson hated Brexit so much, because it was, European wine was 25 and 30% more expensive, and their cheese and this and all those imports, and this is your biggest trading partner, and it's now, and they blamed it all on Brexit. It wasn't Brexit; it was the central banks. It was their own governments fucking them over. It's a big, massive, friggin' propaganda psyop, and the downstream effect of Joe Biden stealing, of the Democrats stealing the election for Joe Biden, because Donald Trump wanted to give Britain a great trade deal, separating them from the European Union. And he couldn't do so in the second term, because think about what happened. Brexit's done in December of 2019. COVID happens in March of 2020. Donald Trump is replaced in the fall of 2020. And the promise of Brexit was never given to the Britons. So it's a massive demoralization campaign. And then eventually we get to today, where as a punishment, the voters in Britain very rationally, and by the way, this was cynically gamed out on the Gantt chart at Evil Corp Central, to destroy the Tories, who destroyed themselves on purpose. They knew that the British people would never organize a robust enough counter at the ballot box, and eventually Keir Starmer was elected with a massive supermajority, with 33% of the vote, to then ensure the further liquidation of the British middle class, what's left of it. And they were attempting to do the same thing to the United States. This is all consistent analysis that Alex and I have been talking about now for, God knows how many years now. So it's all right here. And we're going to watch, I've been watching the British pound cross now desperately. And I literally tweeted out this afternoon, I'm like, something happened at 4 o'clock this morning. Like, the British pound cross, dropped to 82.70 and was immediately bid back up above 83 cents. Every time it is attempted to get below 83 cents, it's immediately bid back up. And there's no 15 minutes. It's not allowed. It spent 1 day below. We're closed 1 day below that recently, and by the end of that week, no. And then we're sending Storm Shadow missiles into friggin' Ukraine, and then we're on our path to World War III. Like, folks, you can see these things, the footprints of all of the fingerprints, the fingerprints of this shit, of everything we're talking about at the geopolitical level, is playing out in the currency and bond markets. And when it really starts to unravel, then when it's going to unravel is when, as always, to invoke Margaret Thatcher, the problem with socialism is eventually you run out of other people's money. When the ECB and the Bank of England, oh, by the way, who owns more treasuries, U.S. treasuries now, than China? The Bank of England.
No.
They bought hundreds of billions of dollars.
You're joking. I didn't know that.
I'm not joking. I am dead fucking serious. This summer, while Yellen was doing Treasury QE and pushing down the long end of the yield curve, the European central banks, that's all, everybody associated with quote unquote Davos, or what I would call Evil Corp Central, the British Bank of England, all of its subsidiaries in the Caribbean, all across the European Union, bought over $250 billion of U.S. long-dated U.S. debt to put on their balance sheets in order to prop the euro up. Buy treasuries, sell dollars, prop up the euro. Since Powell started raising interest rates in September 2021, that group of people has bought $1.1 trillion worth of U.S. treasuries. Chinese and the Japanese stopped selling ages ago. They're just on a massive buying spree, folks. They bought over $300 billion this summer during the, dude, it's all right there. I've been screaming about this to my patrons. I mean, every month I put up, I go through the the U.S. TIC report, the Treasury International Capital report, break it down by country, post it up as, by region. And I tweeted it out at somebody the other day. I'm like, no, this is what's going on. I think I tweeted it back out to Jim Bianco, for Christ's sake. I'm like, dudes, this is what's going on. The euro should already be 90 cents under this scenario. So at some point, they're going to run out of the cover, and that cover is in 60 days.
Exactly.
When Janet Yellen can no longer assist Christine Lagarde in maintaining these credit spreads. It's actually already happened because once the Bank of Japan started tightening and started unwinding the Japanese yen carry trades and started allowing the long end of their yield curve to rise and defended the yen, game over. Like I'm watching the euro yen cross. I'm like, all of a sudden now, how many times have I said I never wanted to become a bond guy? How many times have I said I never wanted to be a currency guy? But this is where I had to go in order to find that. I had to figure out what the fuck was actually going on. I'm telling you, you look at all this cross-market stuff, you're like, it's all right there. They are literally have run out of room because it's offensive to the entire idea of pricing risk that German debt right now, with no government and falling industrial production and all the rest of it, is trading at 210 basis points lower than U.S. debt of similar maturity. And not where it was 4 months ago, which was 150. And they were desperate to keep that from happening. Like I've got this charted out on a daily basis going back 4 years with chart annotations and everything else. You guys, I mean, people who follow the market reports, I put this shit in chart up every friggin' twice a week. I'm like, Chrissy's going to panic again. And she's panicking right now. She's holding German debt down. And the lower the euro goes, the more she has to lower the limit that she can allow German debt to trade at. So the German 10-year, where she used to defend 2.6% when the euro was at $1.12, then she was defending 2.5% when the euro was at $1.08. Now at $1.07, she was defending 2.4%. Now she's pushing it down to 2.3% with the euro at $1.04. Oh, and by the way, oil is now $75 a barrel. What happened? So they're trying to start World War III, and oil's up $3 this week, not 30. Why? Because what would happen to what would signal would that be to bond traders and currency traders and stock traders and everybody else if oil went to $100 a barrel and the euro went to $1.03? What would they do? How many trillions of dollars in capital? With Donald Trump about to come into the White House and reverse the flow of dollars around the world and invite all the capital back to the United States that has gone out for the last 75 years. What do you think happens? The euro literally drops 15 cents in a week. German bond yields go from 2.3% to 5%. There's no LIBOR to arrest to control U.S. monetary policy and force the Fed down and to force the Fed to do their bidding anymore. It's all gone. Like, you want the war? This is the war. It's so, I mean, I'm not saying it's bloody obvious, but it kind of is. Once you understand what their goal structure was, what they're trying to do. It's why they were trying to foment a civil war here in the United States. It's why they kept talking up the idea that, it's irreconcilable. After a while, I was like yelling at Marty. I'm like, metaphorically speaking, I'm like, Marty, stop with the civil war talk. I mean, I know you're just, you're reading your tea leaves, but you're feeding that beast. And it's not necessary. You're giving aid and comfort to Gavin Newsom to split California off. It's why I went through the entire thing earlier in this podcast about what their goal is. If they can't get World War III, they want a civil war in the United States. They want secession. Why? They've got to break the U.S. bond market. They've got to get capital to not flow into the United States. They've got to trash the dollar. They've got to send every idiot out there imaginable working. I don't know who half these people are around who lurk around my Twitter feed. They've tried to get into my good graces over the years. But half of them are all friggin' British or Chinese or Russian assets. Like this guy, Mike Christo. Who the fuck is this guy? He's clearly somebody's agent. Like I can go through. I'm calling them all out now. Fuck you all. You're not taking my country. Fuck you. And they're not taking Britain and everybody else in the process. These are the people that need to go down. And George Soros is not going to get out of this one. And the way you beat these people is by not allowing the volatility. You force them to buy as the assets fall in price. Why? Because they bought here and they're trying to defend the collapse and they're sending more and more money in to stop the collapse. And then they're hoping in some other venue to reverse the flow. And what's that other venue? Well, clearly it's kinetic war or political revolution or whatever it is. And that's how they fight these things. And they try to extend and pretend what's collapsing in the currency markets or collapsing in the bond markets. And then they try and, do something else somewhere in some other venue to influence the flow of capital and to gaslight people into thinking that what's going to happen, what's not happening is actually happening. It's bullshit. They're all about to lose their fucking ass. And we should all be rejoicing. So buy gold, buy Bitcoin, buy US assets, buy commodities, because the inflation that they printed during COVID hasn't been rinsed out of the system. The Fed can't hold interest rates at 5.5%. Otherwise, the US banks are going to collapse. So the Fed's going to lower, and they should, and they're doing exactly what they need to do to protect the US banks while shoring up avenues of liquidity. This is why Bitcoin's so goddamn important. I identified this shit 2 years ago. Go watch Tether's market cap. Bitcoin doesn't trade against dollars. It trades against Tether. Tether is a wholly owned subsidiary of the Federal Reserve. Go look at Tether's market cap. Go to CoinMarketCap. Everybody watching this video, go to CoinMarketCap. Open up the Tether page. Change the price to market cap, and then go. You tell me what you see on the day after the election. Boop, and a $7 billion jump in Tether's market cap. It had been moving kind of up like this, and then boop, and then there was like a big spike. And then every morning at 8:30, when the U.S. Treasury market opens, boop, it goes up another $1 billion. When the U.S. because they're in there buying U.S. Treasuries. Why? Because as Bitcoin's price advances, even if market liquidity doesn't change, Bitcoin say trades X number of Bitcoins per day, right? And the size of the market is X. Well, if Bitcoin goes up in price by 20%, the amount of Tether you need to print to offset those trades has to go up by 20%. Okay? Like, it's not hard. It's just math. And so Tether's in there being a marginal buyer of short-term treasury bills in order to keep Tether 100% collateralized. And then whatever money they make off of their bond portfolio, they're very smartly putting into gold, Bitcoin, and other bearer assets. Go look at Tether's balance sheet. Because remember, they're buying short-term treasuries. They're getting paid 4.5% to 5% on these things. They take the money and they use the money to buy, but they own the collateral. And if the Fed's lowering interest rates, by the way, their balance sheet's actually improving because they bought them at 4.5%. The Fed drops rates to 4%, and they're making money on this. And they're making money as the price of the treasuries, as the yield of the treasuries goes down, the price goes up. Like, they're making money. So Tether at this point is overcapitalized at $131 billion market cap. Like, and I got news for you. No one else has that. I don't see Tether holding British gilt, UK gilt, short-term UK gilts. I don't see them owning, German bunds. Last I checked, they're not buying, they're not buying Hong Kong T-bills from the HKMA. They're not buying them from the Singapore Monetary Authority. They're not buying Chinese debt. They're buying US debt. And like it or not, folks, but because Brent Johnson's not wrong, like, there's a lot of dollar-denominated debt out there. So, like, the mother of all safe haven trades, like it or not, U.S. Treasuries are still a safe haven trade because people need collateral. There's a lot of bond traders out there. There's a lot of pension funds and a lot of insurance companies and everything else that need the collateral. A lot of banks need the collateral to offset reserves, blah, 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 blah. So there's one. We're moving into a currency crisis. Oh, central banks need gold. The United States wants to create a Bitcoin reserve. Shall I go on? U.S. stocks, biggest, deepest, most liquid equity markets in the world. You're a $1 billion hedge fund manager and you're a family office with $2 billion worth of assets, and you want to just like move your money to ground without moving price. Where do you move it? The Dow. Shall I go on? Fuck all of you. Not you two, but everybody else. You have no fucking idea what's coming. That's your trade. That's the Trump trade. And if he does away with the income tax, puts tariffs on, and works to get rid of all the Marshall Plan era tariffs and all the rest of it, and we haven't even talked about the Chinese announcing that they're going to issue Chinese government bonds denominated in U.S. dollars. What do you think that's about? That's making sure that Thailand, that Thai business owners can go get a source of dollars from the PBOC and pay the loans back in Chinese yuan which is what they're making when they sell rice to the Chinese anyway. They need the dollars to get out from underneath their dollar-denominated debt. The Fed clearly doesn't want a euro-dollar market that's 2 orders of magnitude bigger than the domestic dollar markets. They want to shrink that market. Guess who lives on that market? City of London. Fuck you. And you asked me why I was happy. Oh, I wanted to do this podcast this afternoon. This story hasn't quite been told properly. Like, I'm like, dude, like, we're here. We're in that moment. We've been waiting for it. And when the German U.S. When the U.S. German 10-year spread starts to turn back the other way, Christine Lagarde, I am literally going to go to Amazon and I'm going to buy 50 fucking new neck scarves for that cunt. And I'm going to send them to her because her neck is going to be, she's going to be shaking. She's going to have to, because the noose around her neck will be so tight, she will have to go back to wearing neck scarves again.
So,
and I can't wait to do so. My Apple card is waiting. I get 5% back on my Amazon card for this shit. Are you kidding me? I will happily do this. Neck scarves to Christine Lagarde. There's another one. We should all take a Kickstarter for that. Neck scarves for Christine Lagarde.
Listen, when we own NBC, we're gonna make her a nice NBC scarf with the peacock feathers. You know.
Oh yeah, it's fantastic. Yes, absolutely. Like, and she's so dead to rights. We have her dead to rights. Don't let them squiggle. If you let them wriggle out from underneath this hook, it will be on us, folks. It's right here in front of us. And if you don't think that those assholes on Wall Street and at the Federal Reserve and in Powell's inner circle don't know this, if I can figure this shit out, the ones that architected it all.
Yeah.
It's staring you in the face. Jamie Dimon endorsed Donald J. Trump for president. Take the hint. Okay, rant off.
Tom, that was brilliant. Thank you so much for that.
You're more than welcome. I enjoyed every second of it. I really needed to get that off my chest. I mean, I've done a version of that for a couple of other podcasts this week, but like, it's so very freaking important. We're right here.
Yeah.
We're so close. 60 days. All we got to do is avoid World War III.
There's a couple of things I want to move on to, right? But before I do that, I just want to, Alex, Tom's advice about buying gold, silver, and all the other stuff is good. Don't buy Bitcoin. Remember to wait till it's more expensive. That's for you, Alex. Okay.
I'm waiting for Bitcoin to fall below $20,000. Okay. What?
So, what you're saying, Alex? What you're saying is, Alex, that you're also stocking up on sardines and toilet paper and 9mm, because
I haven't published that one yet. How do you know?
Okay. So, Tom, one of the things that I've got from listening to you, and I am in your Slack server and everything, right, which I really appreciate. I've learned a lot, right, from your analysis, and also from you, Alex, is that there is going to be this movement of capital from Europe, from the EU, from Britain into the US, which is going to revive the US economy, revive manufacturing. It's going to take time. There's going to be hiccups, but the US does have collateral. One of the things that I'm curious about, and I'd love your perspective on, is the shifts not in the economic sphere, but in the cultural sphere, in the political sphere, that Donald Trump's election is going to have. In terms of, he put out this really great video, 6-minute video about how he's going to strengthen the First Amendment, how they're going to stop the mutilation, the Munchausen syndrome by proxy, by the state in terms of the trans agenda. They're going to stop that. They're going to close the borders. How are those conversations in the US going to impact Britain and Europe? And I'm looking for some hope here, by the way.
I think it's going to strengthen Europe and Britain considerably, because all the LGBT people are going to be migrating, and then maybe they're going to keep the other immigrants happy and busy. I don't know.
Well, we're going to have Ellen DeGeneres, who's moved to the UK or whatever. I don't know if that's an asset. But just the change in...
Well, all I'm going to say is that the hope here is that it kills the European Union. That's the hope. But in the next little bit here, folks, I hate to break it to everyone, but the dollar has to go through a super cycle high here. Okay, it does. And then, and only under those catastrophic circumstances are you going to get, like, systems don't reform themselves without a catastrophe. They have to be taken to the brink. And as of right now, thanks to all of the monetary machinations and SOMA and everything else, thanks to the Biden administration subsidizing everybody for the last 4 years, and COVID, and like, that capital has to flow out. Things have to get bad. I hate to say it, but that's what's going to cause the crisis. You can see it happening with the populist movements around Europe. Those are all very encouraging. They're incredibly encouraging. And I don't go on this rant I want to see those. I want to see y'all freed from this. But the only way you get freed from that is that first we have to lead here in the United States. We have to lead first. We have to do the hard work. Trump is going to overreact. He's going to probably do too much. I hate to break it to everybody, but he is. Okay, but it's going to be a difficult few years for everyone. We're gonna suffer in the short term because the dollar is going to rise and it's going to kill various export markets. But we're not actually. I don't think we're going to be export focused. We might even wind up with a two-tiered monetary system. Okay, I don't have that mapped out completely at this point, but what has to happen here is we have to make ourselves a destination for capital, and we have to remove that dollar put from the world, and then allow everybody else to go, okay, we're all, we're all have to like eat the shit sandwich and then get back to work and put all the rest of it behind us. And it has to get real for everyone. And then you can start to really, truly rebuild. But hopefully we can do so but not from the position that we were in after World War II, where most of the industrial capacity of the world has been bombed back to the Stone Ages. That hopefully we can just do it from a monetary perspective, from a social perspective, which will be difficult, but that's easier to deal with because you haven't destroyed the entire capital base in that respect. Yeah, there's been a lot of malinvestment. Yes, that malinvestment can be worked off. Sure. There's going to be a lot of windmills torn down. There's going to be a lot of, there's going to be a lot of coal plants. There's going to be a lot of coal demand. There's going to be a lot of all that stuff. But that's fine. But small businesses will start to come back. If the European Union goes away and the regulatory burden of all of that goes away, it'll start the process. And capital moves very quickly to where it wants to be treated best. And the best thing that could happen to Europe is for y'all to lose your purchasing power in the short term to allow for that investment that comes back there will be investment back from there's plenty of European investment in the United States that can all come back home to rebuild. It's what's happening with Japan right now, right? I'm going to use Japan as a clear example. Is why, by the way, Alex, I do not believe that we're going to have hyperinflation in Japan. I think the Japanese understand their problem quite clearly, which is they're going to have to allow their bond markets to sell off. They're going to have to allow, and they have a lot of liquidity and they have a lot of reserves, and they're going to be able to manage those. They have a lot of dollars, they have a lot of equities, and they have a lot of Japanese bonds on the Bank of Japan's balance sheets. So they have a lot that they can deal with. They can internally change their political structure to allow for that, and then allow the unwinding of QE and QQE and all this shit. And what they have to do is they have to entice a lot of Japanese capital that's fled Japan over the last 70 years, and some of that has to come home. So you're going to see Nissan retrench. You're going to see Toyota retrench. You're going to see, and they're going to, but they have to be enticed to have that money come home. And that's the process that they're in right now. And that's the political fight that's happening in Japan right now. And that money can come back. And when it does, and when it's enticed back, it'll help recapitalize Japan. The same thing has to happen to the United States. It's going to be very difficult because it's expensive to pick up factories that you built in the United States and relocate them to Japan. It's going to be expensive. It's going to be hard. It's going to be difficult. But when the yen is very cheap and there's good yields on Japanese government debt, it's possible. And so that's the gig that's happening now. And when the dollar is very expensive and its purchasing power is great, and anybody who has dollar denominated assets at that point, and everybody's going to be buying dollars. They're going to divest those dollars. They're going to turn them back into yen or Deutschmarks or whatever. And if the euro goes away, then there'll be an opportunity to rebuild. But it's going to be. But we may be literally at the nadir of all of this stuff, and we don't even realize it yet. This may be as I don't know that it's as bad as it's going to get, because we still have to go through another round of commodity cost push inflation, because credit-based assets are still overvalued. So there has to be a credit asset deflation and a commodity asset inflation, right? That has to occur. And I don't know what numbers, I don't know where to put those numbers or how that's going to work itself out. But I think that that's what we're going to be dealing with for the next 4 to 6 years under Trump and what comes after that. I can tell you that the group that Trump is empowering, these are not vindictive people, right? I don't see J.D. Vance and Elon Musk and Ramaswamy and Tulsi Gabbard, and I don't see these people as vindictive. What I see is them, I actually see them as very thoughtful people who go, wow, we really have fucked up. And these are our sins. We know what they are. We know what the sins of empire are, and we're really sorry. But at the same time, we have to start working for America. And, we're happy to have a negotiation with everyone. It's going to be Trump's job to go out there and, and be the cowboy that does, that does the Donald Trump thing of, demanding everything and then settling for half. That's what he's going to do.
Yep.
But if we avoid a catastrophic war that kills everyone's capital base, well, we can recover from this much, much quicker than we did after World War II. So that's if you want hope, that's the scenario that I have in my head. Do I put 100% probability on that? Oh, fuck no.
Yep.
Is it still coin flip at best? Yeah, it kind of is. And that's why these next 60 days are so goddamn important. Okay, that's I don't really have anything else to say to this afternoon. I will do.
Thank you. We're going to finish up. Alex, any last words from you? Any comments?
No. No, not really. I think that there's the commodity price inflation is coming for everybody anyway, and it's not going to be over the next 4 years. It's probably going to be over the next 10 years or 15 years or 20 years. And that's going to be a very, how do you call it, a very significant part of the whole financial and economic equation. And I don't think it's even possible to predict how it's gonna happen in even remotely with any accuracy. It was von Mises who said that there's just like no mathematically impossible to prevent a collapse of a system that's been pumped up by credit creation. And I think that in that he was right. And in that sense, we're all in significant trouble. But I think that still Europe and Britain are probably in the biggest trouble. I'll think about Japan, because I thought Japan might be right in the same boat, but I could be wrong. We'll see. But I think that these crises are also going to be Trump's Achilles heels, because how Kissinger said when they went to overthrow Allende in Chile, and Kissinger said, first we have to make the economy scream. When you destabilize a nation's economy, when you ruin their economy, that's when the regime is in jeopardy itself. And I think that Trump will be vulnerable to that. And I think the only way I can think of that he can counteract that he can fight against it and the how do you call it, diffuse that, is by front running it, by telling the people, look, it's going to be shit. Have no illusions about that. There's too many imbalances in the system, and it's not going to be an easy ride. And second of all, he has to. I think that what you have to do is you have to turn back the monetary spigots again. But they can't go into speculation. They shouldn't go into speculation. They should, they should reverse the banking concentration. They should create the conditions for local and regional banks to flourish, and then the QE should flow to it should flow as credit to small and medium-sized businesses locally all across the United States. And there we have practically a certainty, because this is from, according to data from 70 different market economies, is that small and medium-sized businesses create 80% of the employment in any economy. They are the engine of job creation, of prosperity, of innovation, and all that. And the only way that you're going to be able to fund the development of small and medium-sized businesses, across the United States, is you have to reverse the banking consolidation. So you have to make it possible for small, local, medium-sized, small-sized banks to do that kind of thing. And that way, you do two things. You keep the monetary spigots open so that you don't run the risk of a depression and a collapse. You're going to have inflation anyway, but you're going to have inflation with growth rather than a stagflation. And you're going to have people going back to work. And maybe the dollar's purchasing power is going to be declining slowly, but the people at least are going to have purchasing power because they're going to have jobs. There's going to be, and so I think that's the only way that he can counter that. And I have to say that from what I've been gathering in the statements of his people, it seems to me that this is what they're planning to do.
Mm-hmm.
That this is what they actually are going to do. In which case, you might start to get that thing in the United States. I don't know if I've mentioned this before. I think I have. Is like sometimes people get overcome by this dark mood because everything's shit, right? And everything has been shit under Biden. But with the change in leadership, it can change very drastically. And the example that I give to people is, think of Russia before Putin and Russia after Putin. It was a change in leadership, and the picture changed 180 degrees. Yeah. Right? It went from night into day. And in just one generation, Russia went from a complete basket case, the most corrupt country in the world, to one of the leading powers of the world. And so
actually, Alex, I was going to say, I was going to bring up, the blueprint for this is Putin and Russia. I was, as you were laying all that out, I'm like, obviously this is our this is what Putin has done with the tools that he was given when the conditions that he was given at the beginning of his reign. And I'll say to you that I agree with that analysis, and I think that the people who Trump has around him, the dollar going is spiking here is going to be one of those things that is going to be. I don't think it's going to be across the board. Like, I don't think we're going to see, like, if I see, I say a dollar index, so say 125. Let's just talk about that. Does that mean that I also think that we're going to see a commensurate 20% devaluation of the yuan versus the dollar? Not necessarily. I don't think remember, the US dollar index is the pound, the euro, and the yen mostly. Yeah. I was talking with a guy this morning about Mexico. He asked me about Mexico this morning. I was on with a guy out of Mexico this morning, and he asked me our relationship with Mexico. I said, I don't necessarily believe that we're going to wind up with a 20% further devaluation of the Mexican peso versus the dollar. We've already, the peso was too strong 6 months ago. Now it's corrected back towards about 20 to 1 versus the dollar. And we were saying 22 is probably the right number. Well, okay. A 20% rise in the dollar, but only a 10% rise in Mexico. I said, hey, maybe what we really need is, make North America great again, as opposed to making America great again, right? MAGA, as opposed to just MAGA. When I go on this kind of when I go on these kind of rants about this stuff, I'm not. The goal here is to break the oligarchs who think they control the world, who think they are entitled to control the world. They are not going to go gently, and therefore there's going to have to be a very, very concerted and potentially, from a monetary perspective, from an economic perspective, violent move to break them. Because they're not going to, because if you don't, then you let them wriggle out from underneath the hook and they can squirrel their money away like the cockroaches they are and stay alive. We need to kill them off and then rebuild. Okay. And I don't even know that the United States survives as the 50-state compact. I've said this many times in all of this. but it should break up if it needs to break up on its terms, not on its timeline, not on somebody else's timeline in order to try and save them. So not on Europe or Britain's timeline or China's timeline to save themselves, but on our timeline. No, you know what? This is really not working for us anymore, with the least amount of disruption imaginable. And the people who are promulgating, that we all have to, eat bugs and die in suicide pods and everything else, they're the ones that need to go away.
Yeah.
And, I think what we voted for was let's get rid of that. Let's expiate our own sins. Have you look into everybody else around the world, look into the mirror, expiate your own sins. Let's figure out what we've done wrong. And Alex is completely right about the return of regional banking. While I was speaking, I was like nodding my head yes. And I know a lot of people that are very jazzed here in the U.S. at the regional banking level. Now, I was talking to Caitlin Long the other day about this. Like, I want to see you succeed. And I'll be honest with you, once these people are gone, I think you will be allowed to succeed with Custodia Bank. And I think that the return to really rational, regional banking and, the empowering of credit unions and everything else. And I think that's part of the reason why you're going to see Powell cut more deeply under Trump than you were expecting. I think you're going to see Powell go back towards 3% by the end of next year. I think the 7 rate cuts or whatever that we were all, I see that. But that also is predicated on Trump and Elon and Vivek and all these people figuring out a way to cut $2 trillion from the budget and the waste and the fraud. And that comes into, how much can we really cut out of Medicare as just excess payments to a system that is overburdened with regulation and overburdened with payment layers that don't matter. And it's not about care. We can get the same amount of care out of our Medicare system for 1/3 the price. And there's $1 trillion you can cut out of the budget right there, which would then improve the lot of everybody. And, RFK's arguments about making America healthy by getting the quality of the food up and getting certain poisons out. I mean, all those things then that change the projections of the unfunded liabilities of the American government. Because a lot of the argument against America is about that massive pile of unfunded liabilities, more than it is the actual debt itself. Okay, so there's a lot of things that can be done here, and the feeling that I get having watched the people who are involved in this, and I'll be honest, I've said this before, and I will say it again here. I was wrong about Vivek. I think he's got a good handle on what's actually needs to be done from a regulatory level, from an order of operations level. I think he's thought about it long and hard, and the people around him have thought about it long and hard. I'm on board. And then I also know from people that I've talked to who are close to the transition team behind the scenes, they know what to do as well. And they know how to end run any obstacles put in front of them by Congress, and they're going to work solely within the purview of the executive branch, of what the executive branch's powers actually are. And they don't actually have to do any, and this is part of the thing that the people who are not Americans don't understand, but the power of the separation of powers and how much power the president actually has over how the money is spent. And so that can change very quickly. And I think that the people that are trying to meme us into World War III at this point understand that completely. The threats have already been made. Okay? And we haven't talked about what those threats are, but they're real. And I don't want to talk about them in specific here either for a variety of reasons, because frankly, I don't want to jinx anything. Okay? But I think those threats are real. They can happen very quickly in the first 100 days of Trump's administration, and why they're going to fight all the way to potentially flying nuclear weapons at each other in order to stop this. Because they are, frankly, all in on the only way they survive is for us to back down and say, no, we don't want to be nuked. We'll accept our suicide pods. We'll accept the bugs. We'll accept all of it. And that's the Sophie's choice that they're putting in front of, the Hobson's choice they're putting in front of us. And we just have to say, you know what? Fuck you. We don't believe you.
But do you remember that video of that Russian guy who tames his lions with a slipper? Did you see that?
No, I've never seen that one, Alex.
Okay. So just when you go to YouTube, just type in like man tames lions with a slipper, something like that. It'll come up. So this dude, he raised lion cubs. And when they were little, to discipline him, he would use a slipper and he would smack them on the nose with this slipper. Anyway, so he kind of trained the lions to take this slipper very seriously, right? And so in these videos, you see a video where two now grown-up lions get into a fight, and they're these big things. Lions are like 180 kilos. The male lions.
Right.
These are big things. They give you one whack with a paw, and they half you. You're dead. And so these two lions are fighting, and the man like walks into a cage and takes off his slipper and raises it like this, and these two lions like instantaneously split up and scram, each one running to the opposite end of the cage, right? And of course, if the lions are trained to fear this slipper, right? And so they do. But if they knew that they could kill that trainer like that, and that slipper is no threat to them whatsoever, then they wouldn't react to it in the same way. And I feel that this whole construct, this whole matrix that we're living under, that the whole fear factor is this fucking slipper. That essentially we have nothing to fear because they get nothing. They have the slipper. And the only thing is that we've been raised in this matrix for generations. So when we see the slipper, we're like, oh shit, better accept the servitude and the bugs and the our place and give up on everything, give up on freedom, give up on peace, give up on prosperity, give up on free speech, because the slipper is really scary.
Yeah.
And I think that we're going to soon discover that they don't have anything. They essentially got that slipper.
They have conditioned us to believe that this is all we deserve.
Yeah.
No, we deserve better than that. All we have to do is literally say, no.
Yep.
We deserve better than you.
And more people are saying no, and more people waking up. We're going to go through some rocky times, but on the other side of this, it's really good. Like, look at what happened with
and it's our job to and what our job is, and I feel this very, very sincerely, our job is to help elucidate just how fragile that slipper is.
Yeah.
To extend Alex's metaphor. And that's our job.
Yeah.
And to build people up and say, no, you still have plenty of power. Lisa Granahan used to say it to me all the time when we did, again, before we had our falling out, when I do fault lines with him and Garland, Nixon, he would always say, look, the real fight here is that everybody says they don't give a shit what we say. They don't care about what we think at all. He's like, no, all they care about is what we think, because they're desperately trying all the time to stop us from thinking the things they don't want us to think.
Yeah.
And I'm like, you're right, like I just said, sad that COVID took his brain for about a year, but he was right. He was completely right, and I'll give him props for that.
Yep.
Yeah.
Okay, Tom, Alex, thank you so much. Really, really appreciate it. Another stonker of a show. See you again in about a month's time.
Thank you. And if I may have the last word, please.
Yes, please.
Don't buy Bitcoin before it falls to 20. 20,000, then buy. Yeah. Don't listen to Rich. Don't listen to
listen to Alex. When it comes to Bitcoin,
he gets the stuff right, but then he doesn't even push hard enough to get people to.
Oh my God! I have so many friends and family say, "Oh, I wish I'd listened to you when you told me about it in 2013." All right, links in the description.
I wish I held on to the Bitcoins that I had in 2010. Let's just not go there.
Okay, all right. Thank you. Comments, questions, share this far and wide. All the best. Thank you. Bye-bye.
Take care, guys.